In today's market update, we're going to be taking a look at several instruments, our usual slate of instruments. Thank you very much for your positive feedback over the past several weeks, letting me know that you enjoyed this format. We will be starting, as is our habit, with the S&P 500. This is SPX data. I am not going to be repeating what I said in my previous market update, and so I would encourage you to take a look at that update if you haven't been keeping track of these updates regularly. You will remember in our previous market update, which I recorded on the 10th of June, on this day over here, that we were looking at the market reaching up to a level just above 5,400 in order to satisfy the target generated by price crossing over this 20-day FLD as it bounced out of this 40-day cycle trough that formed at the end of May, on the basis that a 20-week cycle trough had formed over here in the third week of April. I introduced an interesting suggestion when we looked at the Nasdaq that trough might indeed be of greater magnitude, but we'll discuss that again when we take a look at the Nasdaq. As you can see, price did reach up to the target generated by price crossing our FLD. You have to love those FLD targets. It has also reached higher, extending further than the target that was generated, which is not unusual given the recent bullishness of the US markets. Our next interaction with the FLD is still expected to be the F category interaction, where price crosses down below the 20-day FLD on its way down towards the 80-day cycle trough. There is our nest of lows for the 80-day cycle trough. You can see that it is still expected in about the second week of July. There is another very quick estimate that we can make in terms of the position of that trough. That is to measure the length of the recent 40-day cycle, which was running a bit long at 42 days, and simply double that to give us 84 days, which would be over here on the 12th of July. That's a very rough method for estimating the potential timing of the next 80-day cycle trough. And so this is what we are expecting in the S&P 500 for the market to come down into this 80-day cycle trough. It is possible that the 80-day cycle peak has formed, but we do not yet have confirmation of that, and so we need to be patient and watch and see what happens. In the Nasdaq, we have exactly the same situation. Price reached up above the level of 19,500, which is where the target was generated as a result of price crossing over the 20-day cycle FLD. That's our E category interaction, of course, as price bounces out of this 40-day cycle trough. Again, it is quite possible, dare I say likely, that the 80-day cycle peak has formed. The next thing that we are expecting is for price to cross down below the 20-day cycle FLD on its way down into the 80-day cycle trough, also expected in about the middle of July. Last week I presented this interesting alternate analysis for the Nasdaq, and I should mention that this could apply to all the US markets. Indeed, it could potentially apply to all stock markets around the world, but for now it is an alternate analysis that works well in the Nasdaq. In this analysis, as unlikely as it seems, it is possible that the 18-month cycle trough formed over here in the third week of April. I would suggest that you go back to our last market update to understand why it is possible that the 18-month cycle trough formed there. We still have a 40-day cycle trough over here at the end of May. Price crossed up above the 20-day FLD in an E category interaction. Price has now potentially formed the 80-day cycle peak. So far, there is no difference at all in terms of this analysis and the previous one we were looking at. The interesting thing is that the 20-day FLD is in a different position, because the FLDs that we are plotting here are based on the analysis that has been performed on the chart. And so when you have a different analysis, you will also have, of course, a different FLD. Price, you can see, has just slipped down below that 20-day FLD. That is our potential F category interaction, indicating that the market is now moving down into the 80-day cycle trough. Notice how the 80-day cycle trough is in a slightly different position, again because of of the different analysis. It is expected to form later this week or perhaps in the first week of July, with a center of gravity for that nest of lows somewhere over there between June and July. Again, we can perform our very rough estimate of when that trough will occur by measuring double 42 days, the recent 40-day cycle wavelength, projecting forward to a distance of 84 days from that potential 18-month cycle trough in the middle of April, and that provides us with the second week of July, or again the 12th of July for that 80-day cycle trough. Now you will notice that I am displaying the 80-day cycle FLD. That is because, as discussed in the previous market update video, it is likely that if this is a trough of 18-month magnitude, price will find support at the level of this 80-day cycle FLD at the time that the 80-day cycle trough forms in the market. This is therefore a critical level to watch in the Nasdaq. If price does find support at the level of the 80-day cycle FLD, our confidence in the possibility that the 18-month cycle trough formed in the third week of April will increase. A market that has not been as bullish as the US markets recently is the Australian market, the ASX. We have been tracking this analysis recently. It is a recent addition to our list of instruments. We have many enthusiastic Hurst analysts in Australia, and indeed the ASX has been performing very well from a Hurst cycles perspective. Here is our 20-week cycle trough in the same position as it is in the US markets in the third week of April. Here again is our 40-day cycle trough. We have experienced a very good and clean sequence of interactions between price and the 20-day cycle FLD. After a rather rocky start over here, where price tried to cross above the 20-day cycle FLD in an A category interaction, it stumbled, of course, and tracked along that FLD, but then it did reach its target. It exceeded it, proving there was some bullishness in the market. It then crossed down below the 20-day FLD, that's our D category interaction, and it accurately achieved and slightly exceeded its target to the downside. It then crossed back up above the 20-day FLD in an E category interaction, and this is where things went wrong for the Australian index. Because, as mentioned in our previous market update video, the target for that price cross, a target that was so easily achieved in the US stock markets, was not achieved in the Australian market. That is a worrying sign. It indicates that there is some bearishness coming into this market. We are also expecting a trough of the 80-day cycle next in the Australian index. Here it is in the second week of July. What has happened since then is that price has crossed down below the 20-day FLD again. That would be our F category interaction. Following an F category interaction, of course, we expect a G category interaction, where the 20-day FLD provides resistance to price. Notice how earlier today, and I am recording this video before the US markets open, but the Australian market has probably almost closed by now, and you will see that over the weekend, price managed to, by default, as it were, get above that 20-day FLD, but it has spent the day dropping down again, a clear example of price finding approximate resistance at the level of the FLD. It looks as if though we are in for a downward move into this 80-day cycle trough in the Australian market. Gold has also been behaving very well from a Hurst perspective. Here is the analysis we have been tracking for some time. You will see here that there have been 131 days since the 20-week cycle trough formed over here in the middle of February. The average length of a 20-week cycle discovered by Hurst 50 years ago is 136 days, and so we are potentially only 5 days away from the next 20-week cycle trough forming. Here is our nest of lows, which you can see has some long cycles, circles and whiskers as part of that nest of lows. And so we are expecting a trough in gold. Looking at the sequence of interactions, I pointed out in the previous market update video that we were expecting at the time of recording that video a 40-day cycle trough. That trough, of course, did in fact form on the Friday before the previous market update video, which was on this day over here, the 10th of June. As mentioned in the previous market update video, we were expecting price to bounce out of the 40-day cycle trough. We were not expecting a very big bounce, and last week it looked as if though gold was beating the system by bouncing up even higher than expected, but in fact all it did was very accurately achieve this E category target, which was generated over here. Let's zoom in for just a moment and take a look at that. Here you can see the crossing point where median price ended up crossing above the 20-day FLD. Our target is generated by measuring from this low price, and if you perform the calculation, you will see that that target was right over here at the high of the bar on Friday. Of course, at this point we were expecting price to find resistance at the level of the FLD. It broke above that resistance, but it looks as though it might be moving down. Our expectation in terms of the trough analysis is certainly that price will move down into this fairly high magnitude cycle trough over here in the second week of July. But as you know, gold is often better analyzed on the basis of the peaks as opposed to the troughs. So let's take a look at a peak analysis in gold. Here is that peak analysis, which warns us that a 40-week cycle peak formed over here in the middle of May. In terms of our interactions between price and the FLD, you can see that following that peak of 40-week magnitude, price crossed down below the 20-day FLD. We label this an A category interaction because it is the first interaction that follows the peak of at least 80-day magnitude. I know it gets complicated when you invert things and look at peaks as opposed to troughs. That price cross generates a target down here at 2250, a target that has of course not yet been reached. At about the time that the peak of the first 20-day cycle forms, following the peak of at least 80-day magnitude, we would expect the 20-day cycle FLD to provide resistance to price, which is roughly what it did during this period of time over here. Price has failed to yet reach this target, which might be an indication of some bullishness coming into this market. Price then crossed up above the 20-day FLD in a D category interaction as it moves up towards this 40-day cycle peak. The big question for the gold bugs is whether the 40-day cycle peak has formed. Is that the 40-day cycle peak? It certainly occurred at exactly the target generated by that price crossing above the 20-day FLD. If that is the case, then it is again downwards next for gold. Finally, Bitcoin, and in our previous market update video recorded over here on the 10th of June, I warned of the possibility that Bitcoin might turn bearish. It certainly looks as if though it has turned bearish. The reason why it was possibly going to turn bearish was because of the fact of this high magnitude cycle trough over here, also expected in about the middle of July. You can see here that this is an 18-month cycle trough that we are expecting Bitcoin to fall into. And in our previous market update video, I discussed the possibility of a symmetrical cycle developing in Bitcoin, so I would encourage you to take a look at that. But I also presented an alternate analysis for Bitcoin, which is more bullish, and that alternative is not yet ruled out. That is the more interesting alternative to look at the moment, in my opinion. And that alternate also, like the analysis presented in the Nasdaq, has the 18-month cycle trough lying behind us, in this case having formed at the beginning of May. This analysis would imply that the market is now falling down into an 80-day cycle trough, which is much better news for those who would like to be bullish Bitcoin than the possibility that the trough that it is falling into is a trough of 18-month magnitude, because if it's an 18-month cycle cycle trough, the move down into it is likely to be more extreme. However, as I pointed out in the previous market update video, we would expect, if this is a trough of the 18-month cycle that lies behind us, we would expect this 80-day cycle FLD to provide support to price as price forms the 80-day cycle trough. The fact that price has now crossed down below this 80-day cycle FLD does not necessarily deny the possibility of this analysis, but it does reduce our confidence in it, meaning that we should probably stand by for further downward movement in Bitcoin. However, there is still a glimmer of good news for Bitcoin. If we calculate the target generated by price crossing down below that 80-day cycle FLD, that is a level of about $60,000. So the target for that price cross down below the 80-day cycle FLD would suggest that we do not have much further to go. It is possible that we will reach this $60,000 target and then price will bounce up, and we will look back with the benefit of hindsight and say that this was indeed an 80-day cycle trough as opposed to an 18-month cycle trough, and that this analysis is the better one and the bull is still alive and well. But we need to watch price action very carefully to see what happens when it reaches that target to find evidence of the trough forming. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Discord server. I look forward to hearing from you.